Yesterday we started discussing IA 16.
Yeah, property, plant and equipment.
Yes, and then we went on to talk about, we went on to define terminologies. This is where we stopped yesterday. Okay. Clear?
Hello, everyone.
Mujib, Assalamu alaikum.
Salam, how are you? Good?
Good afternoon. How are you?
Alhamdulillah.
Some basic questions. My voice is audible.
Yes, that's fine.
Okay. Then secondly, screen visible.
Hello?
Yes. Yes, it is.
Yes, Mr. Zubair. Voice is audible and then screen is visible. So we will continue. Yesterday we talked about cost of the asset. We discussed what is the how I define cost of an asset. The cost will be that any expenses or any payments that we incur in order to bring the given asset to its intended location and workable condition. Or the total of the purchase price plus directly attributable cost minus any benefits or any discount, rebates and subsidies. Clear?
Yes, clear.
Now we also talk about something called scrap value, residual value. Scrap value or residual value. Any idea what is that? Any guess? What is
Maybe
scrap?
guess scrap. The cost of the assets and stock, maybe.
Can you please repeat? I did not hear you well.
I said the cost of assets and maybe the stock.
When you say
Or,
cost of asset, is the spelling is this?
Yeah. No, cost. COST. Cost of assets.
Okay.
Or fixed assets. Okay.
Fine.
Or PPE and the let me say storage room. Maybe that's not used. That's what I. As far
Okay,
as I know.
that's your thinking. So if I understood correctly, what you told me was the cost of the asset that is sitting in a warehouse or somewhere
Yes.
with no use.
Mm-hmm. Yes.
Is what you are thinking scrap value is.
Yeah, this is what I assume.
Okay, what about Mr. Zubair? What is the scrap value, Mr. Zubair? Let's say I purchased an asset on 1st of January 2020. And we assume the asset has a lifetime of 5 years. So this will go up to 31st December 2025. And on this date I purchase and I pay 120,000. End of the fifth year, are we gonna throw the asset?
Are we going to throw the assets?
Yeah, my question to you, let's say you have a car
Mm-hmm.
and the company policy for the car depreciation is 5 years.
Okay.
So end of the fifth year, would you will say that yes, now depreciation is fully over, so I will throw this car to the desert.
No,
So
there's a
anyone will do this?
no one will do this.
Yes. What they will do instead?
They'll sell it maybe, at least.
They will sell it. Correct?
Mhm. Yeah.
Normal, most of the time, any assets, once the useful life is over, they will tend to find a buyer.
Mm-hmm.
And do you think you can sell at a very big price?
No, of course not.
We cannot sell at a very big price, but we would find a very nominal price.
Yeah.
And that amount you will receive by selling the assets at the end of its useful life is known as
Gain and loss.
scrap value.
Mm-hmm.
Understand me?
Okay. Yeah.
So it's not, but you thought.
Yeah.
You see, you also having a different point, but that is not scrap value.
Mm-hmm.
That's a value for slow moving item or idle item or obsolete item.
Okay.
Okay, but the scrap value is this. Understand me?
Okay. Yeah. Clear.
Right. Now, also there is another small point here. Disposal cost.
Okay.
So, sometimes what happens, you use an asset and you use it for the given life of the asset, like 5 years in this example. At the end of the fifth year, if you keep the asset with you, it's a headache for you.
Okay.
So, in order to get rid of this headache, what you do is you find someone and you will pay them to remove the asset from your custody. You have experience like this?
Mm.
Personally may not be, but at least within your business extent experience.
Means that, if I have any fixed assets and I see that is useless, so I will dispose it. That's what you're trying to say.
Yes. Both of you, have you been to Japan?
No.
In Japan, what happens? This type of waste, this type of electronic waste or asset waste. Now, like for example, in our countries, like in meaning Middle East, like in Qatar or Saudi, from our home, if you open the door in the parking area or somewhere, you will find a dustbin, a garbage bin. Are we seeing it or not?
Garbage and bin?
You
Yeah,
know, like to dump your kitchen waste.
Oh yeah, definitely. Yeah.
So
disposal.
dump your kitchen waste.
Dispose of.
You would find the garbage bin in the parking lot or somewhere, and then that building maintenance team or someone will come and collect it.
Yeah.
In some houses, if let's say for example you are on the 25th floor, you will not be able to come down all the way down to the parking lot to dispose the garbage bin. What happens is they will in that house they would have planned accordingly. There is uh, like a duct. You open the door
Yes.
and then
Yes.
you drop in.
Yes. Yes.
So these are common possibilities in Middle East.
Hmm.
And do we need to pay for this?
No.
We don't. Generally, we don't need to pay. In some exceptional situations, some in now in Qatar, there are certain malls here. There is one mall called the Festival City, Doha Festival City. There is a mall called
Hmm.
DFC, Doha Festival City. If you to operate or to rent a shop, you need to pay extra money to manage your waste.
See.
Okay,
Yeah.
but majority we don't need to pay anything. We just go and drop that inside the garbage bin dedicated, and the municipality team will manage that.
Correct.
But in Japan, story different. In Japan, what happens is if you happen to dispose any, not necessarily the kitchen waste, but other waste like electrical waste. For example, you need to throw a computer or a hard disk or a desktop or CPU. You simply can't throw. You need to find someone whom will come and collect and you pay them.
Yeah, definitely. There is one for example in our company as well. There was some stock, it was expired, and they call the disposal company, and we bear the charges for disposing the inventory. Even the inventory was over. So this
Hmm.
is same like I have an example like last
But
year.
So
I think destroying. This is the
yes,
case of destroying the assets,
So we,
not
as
correct.
the.
per
So
Saudi food law, we
you know,
dispose the.
for the company who will dispose, they will think it is destroyed. But the company who will take up, they may
Mhm.
go and refurbish it and they will export to other countries.
Yeah,
Mhm.
yeah, you're right.
That's a different story. So we are not here to talk about. But the point I wanted to raise
Hmm.
now, at the end of the useful life of the asset, most of the time you could find a buyer and they will buy the asset and you will receive some money.
Yeah,
But on the other hand, in some circumstances, you would also may have to incur money in order to get rid of that asset from your custody.
mm. Yeah,
Okay?
yeah.
Now, we have another term, depreciable amount. What is depreciable amount is, peep, peep. So, we'll wait for the Adhan. Yeah. Okay. So do you see these two equations?
Yes.
Most of the time, more than 95% of the time, this is the equation. Cost minus scrap value. But sometimes you would also have cost plus disposable, disposal cost. Both will have the same meaning of depreciable amount. Understand me?
Yes, yes.
So, but you also can do that. You could ignore this. But I don't want to miss anything. That's why I have written this. But normally, this is the equation that you need to know. Got it?
Yes.
Now, we will talk about something called you got to understand the difference between these two terms. Here, depreciable amount, and here it is depreciable
Assets.
assets. So, what is depreciable assets? Now, we talk about non-current assets. I divide this non-current asset. I mean, actually, I will add one more word here. Tangible non-current assets. We talk about tangible non-current assets. I divide this as depreciable and non-depreciable. If I explain you what is non-depreciable, you will understand what is depreciable. Unlimited life. What is non-depreciable? The life of the asset is unlimited. What do you think the good example for this?
Land.
Unlimited life or non-depreciable asset and the tangible non-current asset. What asset will fall into this category?
Maybe land. I don't know.
Very good. Very good.
Yeah.
Maybe only
Property.
only land. Normally, and I would like to add another word here, brother. Freehold land.
Okay.
Why I say freehold land?
Not held by any financing or something.
Bear with me for 1 minute.
Means not held by bank or any third party.
Yes, sir, Mr. Zubair. So
Yes, sir.
what is freehold land is that no commitment, no obligation, or no any hidden agenda behind this land. Now, if you have leased out this land, or if you have mineral rights, or if the land is with extraction resources, or regenerative and non-regenerative resources within the land, then those lands will become what you call that is not freehold land. That's under obligation.
Okay.
So only scenario which is non-depreciable asset will become freehold land. Understand me?
Okay.
Mr. Item, you are okay?
Yes, clear.
Good. All other assets, all other tangible non-current assets will be depreciable, meaning these lifetime is
Question, Mr. Mohammed.
pardon?
Yeah, I just want to ask a question. I know the different that
Yeah.
depreciable and undepreciable. That's
Yeah.
also when it comes to profits.
Hmm.
Okay, if the
Any
land
investment
also,
property, it's not depreciable.
Pardon, Mr. Zubair? Mr. Zubair,
Any
Mr.
investment property, it's not depreciable, I think.
We will talk about investment property separately. Now we are
that's just,
discussing property, plant and equipment. Let Mr. Haitham continue what his question is, then I will come
yeah,
to you.
if you know the land we are
Yeah,
using,
yeah.
there is a profit from it. So in this case, can we
Well,
consider that?
no, if I understand what you're telling me,
Okay.
if I am receiving any profit from the land, is what you're saying.
Yes, yes.
Like farm, you mean?
Absolutely, yes.
Still that's a freehold land.
Okay.
So what is non-freehold land could be if you what do you call this, offshore drilling facility.
Mhm.
You know, the oil and gas reserves are within that land.
Okay.
And then if the government is extracting something in that, or any mineral rights, or any generative and regenerative resources.
Yes, okay.
And moreover, one more thing, if the owner has leased this land to someone, and the lease period will be considered as the total life of the asset.
Clear.
Is that clear now? Mr. Zubair, what is your question then?
Any what asset will be non-depreciable? Non-depreciable.
Yeah, that's what we are saying. The land will be non-depreciable.
Okay. If it's under the if there is a mineral or soil something under the hold.
Correct.
Okay.
So I believe I made the scenario clear now.
Yeah.
Okay. Now we have all other remaining tangible non-current assets will be depreciable. So now, we learned what you call, we learned depreciable amount, and now we learn depreciable asset. Then we also need to learn something called what do you think about this?
Useful economic lifetime.
Yeah.
Means usage of the asset.
How long the asset will last with us?
Yeah.
Correct, Mr. Haitham?
Yeah.
Yes.
Yeah. So how long the asset will last with us? That is useful economic lifetime. So now we learn cost, now we learn scrap value, now we learn depreciable amount, but now we learn depreciable asset, and also now we learn useful economic lifetime. Now we will have to learn something called depreciation. We have to learn something called what we need to learn. You are following me, right?
Yes, yes.
Yeah.
So you understood this now. A systematic allocation of the depreciable amount of the depreciable assets over its useful economic lifetime. Both of you understood this or not?
Yes, yes. Hello?
See, the first thing is systematic allocation of the depreciable amount of the depreciable assets over its useful economic lifetime. Now, that's why I discussed with you before I come to this. What are the new terms? We learned depreciable amount, we learned depreciable assets, we learned, and useful economic lifetime also we learned. Yes or no?
Yes.
Yeah.
So this is the depreciation. So I believe I discussed with you now the basic terms under property, plant and equipment. So these basic terms are important. You should know what is cost. You should know what is scrap value. You should know what is depreciable amount. What is depreciable amount? I think I wrote an equation, right? For depreciable
Yes, yes.
amount is
Cost minus scrap value.
cost minus scrap value. And then you also should know sometimes it will be disposal cost. Have any one of you experienced seeing a building collapsing in front of you?
No.
I have experienced. I was standing on a road like 400, 500 meter away, like a 6th floor building, suddenly collapsed and then fallen down.
The reason?
No, that's what I'm going to tell you. No earthquake, no terrorist attack, no natural disaster. It's because thanks to the people who have constructed the building became, okay, I will discuss one more thing. So what do you think the reasons for depreciation?
Because every asset there is a useful life, and that and to make exactly financials in the stand as per the standard, so the right cost will go to the right, and also we should have the some fair value for the asset, and every year because there
See,
will be a reduction in the
Mr.
asset
Zubair,
for the useful life.
I'll tell you like this. Okay? You see me, no? Do you see me? Okay, wait.
Yeah.
Wait. See, you see my finger, no? Here?
Yeah.
And if I have a small cut in my finger through a blade,
Yeah.
I go to doctor. And I would
Definitely.
normally expect what? Put a small plaster and then take 10 real colors. But based on what you explain me now, he's saying, okay, we need to take MRI and then CT scan, and then we need to send you in helicopter and all this.
Yeah.
You understand what I wanted to tell you? Sir, Mr. Item, you got it what I mean, no?
Well, I'm guessing as well, like Zubair. You'll say that dividing the costs on, during the useful life.
Correct. There is one thing. There is a famous term here where
and
yeah, Mr. Zubair.
Yeah.
Have you seen this term?
Yeah. Because
this is the main reason why we depreciate.
Yeah.
Because the value of the asset falls over the period when we using the asset.
Yeah.
Correct? So this is one reason. Now, if I ask you another question, you purchased one, let's say, 10 desks. You purchased 10 desks. And you kept these 10 desks inside your warehouse. Okay? Now,
no,
you have not used this, brand new desk purchased, and due to the space and the other reasons, you didn't use it, you put it inside the warehouse, and that is there for the next 3 years.
Yeah.
Question to you, do we need to depreciate this desk or no need?
No, if we use, definitely we have to.
No, here we are not using it.
If we are not using, then we cannot.
Okay, that's Mr. Zubair answer. What about Mr. Haitham?
If we are not using it, okay, we still own the assets and there should be depreciation running.
And also, is depreciation is a cash expense?
No.
Depreciation is not a cash expense. It is a non-cash expense as a result of the management assumptions.
Yeah.
Correct? So, regardless whether you are using the asset or you are not using the asset, the moment you have an asset in your ledger, that asset should be commenced depreciation. Understand me?
Whether we use or not use, we have to go.
Regardless, brother. Once you have the terminologies are important. Once a depreciable asset reached your business and that is now recorded in your ledger as an asset, that point itself, the clock starts ticking, you go to depreciate. Understand me?
Okay, got. Yeah, understand.
So, fine. Now we try to understand the reason for depreciation. The main reason for depreciation is wear and tear. Meaning you are using it and throwing it. Also, can someone physically experience the depreciation? Can they see depreciation? What do you think, Mr. Haidar? Sorry, Mr. Zubair. Like you have a
Yes.
table, okay? After 1 year, you're looking like this. You're looking like this. And then, can you find out depreciation is going out of the table? Yes or no? Totally not at all possible, isn't it?
Sorry, I didn't get why.
No, but I'm trying to mean, Brother Zubair, as I told you, depreciation is a non-cash expense. Depreciation,
There is a
pardon?
voice interruption. I will start.
Hello? Mr. Zubair, you with me?
Yeah. No.
Okay. See, when we are saying that depreciation is a non-cash item. And so, like for example, stationery expense, you could see, physically you can touch and feel how much is the stationery you purchase. Correct?
Yeah.
Whereas depreciation, it is not possible like this.
Mm.
This is what I
Yeah.
want to elaborate. So,
Yeah.
a systematic allocation of the depreciable amount of the depreciable assets over its useful economic lifetime. So this is another definition. And we also have something called
Fair value. Yeah.
Market
fair
value.
value.
Mm.
So now fair value is another important terminology. Fair value is one another important terminology. Now you see, there are two different types of definitions for fair value. I will first explain you the old one and then I will tell you what is the new one. Okay?
Okay.
Actually, we have one special standard IFRS 13 to discuss about this only about fair value. Here, let's say I have a car. This is my beautiful car. I want to sell this. So this is me. And then I have two potential buyers. Mr. A and Mr. B. Mr. B is my brother. And Mr. A is just a stranger. Now both of them are interested in buying this car. Suppose if I give the car to Mr. B, or if I decide to give the car to Mr. A, based on normal circumstances, will there be a significant difference in the price?
Yeah. Definitely.
Obviously, there will be significant difference in the price. Now let me define fair value. A value arrived between knowledgeable Winning parties in an arm's length. So you need to understand all this term now. Between knowledgeable and winning parties. Now regarding this car, the person who is buying and the person who is selling, both of them must have good knowledge. Suppose the car is having an accident, the buyer should have that knowledge. Yes or no?
Yeah.
So the knowledge should be there. Secondly, winning parties, knowledgeable and willing. No one is under any compulsion. So the seller comes with the .5 gun and then pointing on your forehead and then say that you should buy. If not, I will kill you. Can that happen?
Definitely. If, Way to buy.
So it should be both knowledgeable and willing parties. Now what is this term? In an arm's length. So what do you think? What is this term then? This term is, see here.
Willingness.
No, arm's length. Now let's assume you walk on the road. Mr. A is Mr. X. Mr. X is walking on the road. Can he hug anybody in the road? The person walk in front of him, so he is totally free to hug him or her. Can he do that?
No.
If we do that, what will happen?
Shurta will catch.
Askari will come and catch. Right? So, but can he hug his brother?
Yeah, he can.
He can hug his brother. So the point what I wanted to raise, brother, what do you mean by arm's length? This gap.
Okay.
So anyone you would entertain within this territory are inside arm's length. So a price you will give it to them will not be a fair value. Correct? Yes or no?
Yeah.
So the fair value is that. So this is old definition. Let me also look into the new definition now. Mr. Haitam, you are with us, right?
Yes, and we have taken this one. We discussed that,
we
at
discussed
the beginning.
somewhere?
Yeah.
Okay. Give me like 2 to 3 minutes. I need to take a small break. I'll come back. Huh?
Okay.
Hello.
He had a break, huh? Couple of minutes.
Yes, sir.
Yes.
So now we need to find out the new definition now. The new definition according to IFRS 30. That is, one second. The price that would be received to sell an asset or paid to transfer the liability in an orderly transaction.
Market value.
Correct. Between market participants at the measurement date. So this is the new definition. Huh? This is because they came up with the new standard based on our syllabus. If we have it, we will discuss it there in detail. So now I have, so do you understand this or not? The price that would be received to sell an asset or paid to transfer a liability in an orderly transaction. The word orderly means, what do you think? The word orderly means normal or between these market participants are them, knowledgeable willing parties. At the when you're going to measure, at that time, at that date, you will arrive at this. Understand me?
Yeah.
Yes, yes.
So this is one another definition that we talked about fair value. So we talked about depreciation. We talked about okay.
Still, we have carrying value also.
Yes, I'm going to come to that now.
Okay.
Now, before carrying value, there is another term. Sorry. Depreciation expense. Now we know what is depreciation, correct?
Yes.
So depreciation expenses are the depreciation we charge to
And assets.
our financial statement or our income
Our,
statement.
okay.
Income statement.
Correct. What do you think the double entry will be?
Debit expense.
Debit what expense?
Sorry, depreciation expenses.
Credit
Very good.
accumulated depreciation.
Accumulate depreciation.
Excellent. Mumtaz. Now the next term here, what is accumulated depreciation? So how can I explain accumulated depreciation?
Well, I can say the cost during the what do you call it? It's about of the the cost of the or the depreciation expenses. Let's say about of
Is
what I
that
can say
is what you're saying is this word about?
about like the what do you call it sub bow for example.
Yes, yes, yes.
Way you're putting your expenses till it's equal the cost of the fixed asset.
So anyway, let me put down the interpretation in the way that I feel. The total depreciation charges do you get the meaning of what I have written here?
Yes, clear now.
Okay.
Total depreciation charges accumulated over the several years to the extent of to date. Meaning, if on 31st December 2023, the accumulated depreciation on this date will be the depreciation for this period, depreciation for this period, and the depreciation for this period. Clear?
Yeah.
Yes.
Right.
We can
Now we
say
will
that.
discuss.
Sorry, if we will say
Pardon?
it's the link between the expense account and the asset account, which is
The link between expense account and the
asset account, which is the
you mean this accumulated
cost.
depreciation?
Yes.
See, sir, if you see the ledger entries, I will have asset. Okay?
Okay.
And then I will have depreciation expenses. And I will also have something called accumulated depreciation. Whenever in any given year I have depreciation expense, I will debit my depreciation expense account and I will credit the accumulated depreciation account. So what I will do here, I will write here accumulated depreciation. Here I will write depreciation expense. So as we know, this depreciation expense is an income statement item. So what we will do, we will balance this and this will go
Goes
to
here and
P&L.
yeah. P&L.
P&L. But this one here is not a balance sheet P&L item, it's a balance sheet item. This
Yes.
will
Balance
carry
sheet,
forward.
Yeah.
And I will carry forward to the next year. And next year I will have a balance. So in ledgers, this has nothing to do with the assets. Do you see that?
Okay.
Yeah.
In ledgers, this has nothing to do with the assets. But when I do the presentation, I mean, when I prepare the financial statement,
You'll deduct from here.
Yeah,
and then I show the assets, what I am showing, I will show the cost. Cost from where I will take? From here.
Yes.
Correct? So
Yeah.
I will take that. And then I will also have accumulated depreciation. That from where I will take? From here. Then I will show the net answer. And that net answer is, we call it net book value. Understand me?
Yeah.
Yeah.
So
This is what
I
I'm
hope.
trying to say. This is what I'm trying to say, that it's
very good. Very good.
linked to other.
So that matter is very clear now for everybody.
Yeah.
Fine. Now we go back. So we understood accumulated depreciation. Now we need to understand something called Before that, I will also like to discuss one more term. So, what do you think revalued amount is?
If you rechange the asset amount or asset value,
Yeah,
revalue of asset.
meaning they are changing the value from
Price.
the book value to a market value.
Yeah, to the fair value. Yeah.
So, value arrived from the market to substitute the book value. The value arrived from the market to substitute the book value will be revalued amount. Mr. Haitam, it's clear?
Yes, clear.
Yeah.
Okay. Now we go to next term. Carrying amount. We go to next term, carrying amount. What is carrying amount? Cost or revalued amount minus accumulated depreciation. This is the carrying amount. Clear?
Yes, which is the book value also.
Yeah, you can see now I'm going to talk about different names for this. So if I say carrying amount is CA, you have one word. Then you also have then you also have then you also have understand me.
Yes.
These all are same meaning. But the standard uses which term? Standard uses this term. Equation is cost or why I use this word here? Because during the passage of the life of the asset, you may revalue the asset. And then you will not have the cost, you may have the revalued amount. Understand me?
Okay.
Fine. So these are the terminology or definitions within IAS 16. Then we talk about initial measurement. When any PPE. No, I will replace it. It is probable that the PPE will bring economic benefits to the business. So this is one condition. When you can recognize, when you can measure, or when you can bring your assets into the box, you got to find out it is probable that the property, plant and equipment, you would change this term here, initial recognition. It is probable that the PPE will bring economic benefit to the business. You understand me?
Yes.
So that's the first condition. Second condition, the cost of the PPE should be able to measure reliably. The cost of the PPE should be able to measure reliably. As long as you satisfy these two conditions, you then recognize that item as a PPE in your books. Understand me?
Yes.
So this is one of the important point of view, that we need to recognize the property, plant and equipment only if this meets these two conditions. Once we satisfy the recognition criteria, PP should be initially measured at cost. Understand, sir?
Yes.
So we talked about what are costs. Costs are directly attributable costs incurred in order to bring the asset to its intended location and workable condition. And then we find out, okay, I have a piece of machine inside my plant. So can I recognize this as an asset? So this needs two conditions. And we should ensure the availability and the use of this should bring economic benefits to the business. Secondly, the cost we should be able to measure reliably, meaning there can't be any ways. No. Understand me?
Okay.
Yes.
Good. So that is initial recognition, and this is measurement. Now we talk about subsequent expenditures. So what do you think subsequent expenditures are?
Spare parts,
Now,
maybe.
we talked about, yesterday we talked about this, that someone tell me that
Yes,
changing the engine of the car.
yes.
This is one example. Or sometimes we adopt one additional room to our building, our house. Sometimes what we also do, we color or show, we paint our house. Sometimes we buy extra storage to our hardware, to our computer. Sometimes we
Or software as well.
also, yeah, of course, the hardware and the software also. And sometimes we change the seats in the flight. So, how we want to understand, I would first write all expenditure incurred subsequent to the initial recognition is known as subsequent expenditure. Got it?
Yeah.
Yeah, I'll just quickly use the washroom. Yeah, so all expenditures incurred subsequent to the initial recognition is known as subsequent expenditure. But the question is, should we capitalize or not? This is a question. How I know this?
On the
How will I know whether I should capitalize this or not?
hear me?
Yeah, I'm hearing you.
Yes, you can capitalize.
Sir, please repeat.
I said yes, you can capitalize it.
You mean all of them? Any expenditure subsequent to the initial recognition incurred pertaining to the asset, we should capitalize all?
Well, companies because we have a
All
limit
right. Now, okay.
any as
Before I go to this, I would like to discuss another small area, maybe little bit out of scope, but I believe it is useful to you all. Tell me if you know already, then I will stop discussing this. Expenses are categorized into three. Have you seen this?
Yeah.
So all of you know these three terms?
Yes. Yes.
Yeah, yeah.
Good. So then I don't need to go on to talk about in detail. Am I right?
Yes. No need.
Yeah.
Great. So coming back to should we capitalize or not? Now let's say I have a car. Okay? The car, now see, now when you talk about car, question is whether is it asset or not? First question. What is your answer?
It's an asset. Yes.
It's an asset. Also, you have to add the additional word subject to where this car is used or where the car is available. Suppose if the car is available in what you call Al Futain Group, they are car buyer and seller. They keep the car in the showroom for customer to buy.
Yeah. Okay.
Then could you capitalize? Could you consider that
No,
as an asset?
no,
I mean,
we
No.
will not.
it is
We
an
will not.
asset, but it is not non-current asset.
Mhm.
You understand me?
Yeah.
Yes. Yes.
So, okay. Now anyway, let's assume for the sake of our understanding, car is an asset. Good. Now, after 3 months, I buy one a Viper. Is it subsequent expenditure or not?
No.
Habibi,
This is in a.
I bought the car 3 months before. Now I am purchasing a Viper to be used in my car. So my question to you
Subsequent.
is this a subsequent expenditure or not?
Yes. Yes.
But next question, can I capitalize this as part of the cost of the car?
Yeah.
Well, no.
It is the cost of the car.
See, the answer is
Normally,
as
no. But
long,
we'll talk about
exactly,
one.
answer is no, but let me clarify. As long
Yeah.
as any expenditure incurred subsequent to initial recognition
Recognition.
enhances the economic returns more than its previous condition. Then the what they call then the subsequent expenditure should be capitalized. Do you understand this or not?
Well,
As an explanation.
As long
somehow.
as any expenditure incurred subsequent to initial recognition. This example, car wiper. He purchased the car wiper, correct?
Yeah, but if without the car wiper, the car will continue, working. That's.
Yeah, see, just brought an example. See,
Okay.
buying the car is initial cost. We recognize that as an asset. After 3 months, I purchased one wiper. So, purchasing a wiper will fall into the category of subsequent expenditure. There is no problem in that. But the
Agree.
question is, can I capitalize this or not?
Based on what you given? No.
Based on the economic returns that you will
Yes.
receive should be more than the previous condition.
Okay.
See, you have the old wiper, you remove it, and then you fix the new wiper. Will it attract new?
Add value.
See, for example, you are running a taxi. Example, okay. So after changing the new wiper, if the taxi income will significantly increase because you put a new wiper,
No.
then that new wiper will be a capital expenditure. But it won't, right? It won't be. Is it clear?
Yes, yes, clear.
Mr. Zubair, you are okay?
Yes, sir.
Okay. So this is, we talked about subsequent expenditure. What about replacing an engine in the car? What do you think? Replacing an engine in the car is it a should capitalize or no need? Yes, brother.
Yes.
Your voice, it's gone, from my side. But I don't know about Zubair.
Pardon, sir.
I said your voice, it's gone. I couldn't hear you.
My voice is gone.
I didn't hear you well. Maybe
Well, 1 minute,
network issue from my side.
1 minute, 1 minute, 1 minute, 1 minute, 1 minute. Let me find out. Yeah, I know the reason. Wait. Hello.
Yes, yes.
Yeah.
You can hear me now.
Yeah.
Good, Mr. Haitham, you can hear me. Hello, Mr. Haitham. Hello.
Hello.
Yeah, Mr. Haitham, can you hear me? Mr. Zubair, can you hear me?
Yes, sir. Yes.
You can hear me. Where is Mr. Haitham is where? He's there, but why is not hearing me? Mr. Haitham, are you there?
Now your voice is very clear.
You okay with my voice, right?
Mr. Haitham, why not?
No. For you, my voice is okay?
Can you hear me now?
Yeah, I can hear you. What about you?
Yeah. Yes.
Fine.
Yeah.
Mr. Haitham,
Yes, I can hear you.
am I audible?
Yes.
Great. Yes.
Okay, fine.
Okay. Alhamdulillah. So we talk about the subsequent expenditure and see another example. So this is, we should capitalize.
Yeah.
Why? One of the important, now how actually happen, you see how it will happen. You see, you have the old engine. You need to, either you will sell it out or you scrap it. Sell or scrap. So then you need to perform something called disposal.
Disposal.
For engine. And then now the new engine, you should debit to motor vehicle, credit to cash or back.
Yeah.
So this you need to capitalize. Clear? Now what about color wash in a house? I use a different term here. Painting. What about painting in a house?
Subsequent.
Yeah, it is, no, okay, it is subsequent only. Question is it an expense? I mean, can we capitalize or not?
No.
Exactly. We cannot capitalize the color wash. Maintenance expense. Can we capitalize?
No.
We also call this AM. Annual maintenance contract or annual maintenance, yeah. So what do you think? Should we capitalize or no need?
No need.
Good. So this is subsequent expenditure we understood. Now, we now talk about calculation of depreciation. Give me few minutes. I will join you, okay?
Okay, sir.
Okay.
Calculation of depreciation. How many methods?
Straight line, reducing, weighted average.
Okay, one method is straight line method. Two,
Reducing,
reducing balance method. Is there any more method? Only two.
decline, double decline. Averaging.
There are so many methods like this.
Mm.
Okay. Okay. One more.
Sum
Sum
of
of
the years. Yeah. The years.
digit
Okay.
method. But we generally discuss
Straight line. And
these two only. We don't discuss the others. And we are not anyway studying elementary depreciation here.
But not really. I mean, uh, is there any? I know it's simple, but is there any situation where we are forced to use, the third or the fourth or the fifth? That's what I want to read.
You remember we talked about accounting policy?
Yes.
We talked about accounting policy. And if you actually choosing the method of depreciation is entirely a management call.
Okay.
And one more, and also it depends on some of the nature of the asset. Like for example, you furniture, a table in the office. A table in the office, what do you think the most appropriate method of depreciation?
Straight line method, I think.
Pardon, sir?
Straight line method.
Straight line method. Straight line method. But what about the machines in a factory?
Maybe.
Machine in a factory. See, now when you have a machine, you purchase brand new. At the initial point of time, it will work much better in efficient manner. But as you continue to use, the efficiency will increase or decrease. As you continue to use, the efficiency will reduce, right?
Decrease.
Yeah, decrease.
So the most appropriate method for depreciation of a machine in a factory will be reducing balance method. Agreed or disagreed or agreed?
Well, agreed.
Agree.
So agree, agree, disagree. What's your option?
Akid.
Akid, yani, mashallah. So, and I will not discuss these other methods here. These methods I'm not going to discuss.
Okay.
And I believe I discussed with you this what you call business accounting by Did I discuss this at the beginning of the class?
Business Accounting by Frank.
This is a textbook regarding basic accounting. And if you have good time, free time to read, I would recommend this book. I believe I have the book. Let me check. Honest. Indeed, I have somewhere. Let me search. See, this book.
Is it advanced or?
It is 0 to 100.
Okay.
So let me share
Can
this.
you please share? Yeah.
Yeah, that's what
Okay.
I'm going to do. But let me see, how can I share this now? Oh, yes, I found a way to share. And this is exclusive. Please keep it with you. And I could consider this is one of the benefits for this classes, because it's not freely available.
Okay. As you like.
Okay. I'm sharing it, but keep it with you. Don't share to any others. Anyway, it's a sadaqah, but also commercial perspective also behind it.
Appreciate it.
So anyway, I have shared the book. So this book, actually, this book only taught me accounting. As probably I told you that I'm a science student. Did I told you
Oh,
that?
no. You said now you're surprised. Yeah.
I'm a science student.
MashaAllah.
Oh, mashallah.
What has happened actually, my father forced me to become a doctor. From Sri Lankan education point of view, there is something called O level, 10th. There is something called A level plus 2. I don't know Middle East or other countries how they're phrasing it, but I'm sure in Pakistan it's the same.
Yeah.
So my father told me, look, you should become a doctor. Then he told me to study A-level science. I did the first exam, and
Just to
my results in
interrupt you.
the pardon.
Yes, interrupt.
You are hearing me, right?
Can you hear?
One
Yeah,
second.
same like with me. My father wants me to engineer.
So my father told me, look, you should become a doctor. And then I have done my A-level exam, first attempt. And I have, that time we had four subjects. There's a subject called chemistry. There's a subject called physics.
I hate chemistry.
And then there's a subject called zoology. There's a subject called botany. Now what has happened, these two subjects, they merged it and they name it biology. And in my first exam, I got fail and S. It's a very, very, very meaning bad qualification, bad results. So father told me, it's fine, you do the second exam. I have done the second exam, second attempt, chemistry, C, physics, S, then zoology, again F, botany, S. Like that, I was keep failing it. And one person came and advised me, look, you should do accounting. That's how started studying accounting, and that is a big story. But in in that situation, one person advised me, study or read this book. And I started reading this book, and then that helped me in my career.
Well, I had the same situation. I started in agriculture college, and then I moved to yeah. Then I moved to business administrative.
Yes. Good that
So
if you become an agriculture doctor, then you will be behind all the trees. Date tree, palm tree.
yeah.
And then Mr. Zubair could be, putting up roads and constructing buildings and all that. And then
Yeah,
you would end up seeing me in hospitals.
yeah.
I will be keeping injection in my hand and then poking everybody.
Even my story is like very different, because on the last time I changed the subject. I studied complete 2-year chemistry, and after last day I changed the subjects from commerce and accounting, and I achieved in good marks. And I did not tell to my father.
I used to teach chemistry. I was very good in chemistry.
Because I was even right now, even someone speak in chemistry, I hate. I don't know why I hate chemistry.
You will kill them?
Yeah.
Anyhow, that means we three of us have studied some common subject.
Yeah.
Yeah.
So anyway, this book, as I shared now, please, this particular book, take your time. If you just open, I will open that book, you see.
Yeah.
If you go to the table of contents, see this gentleman, only the person who actually who passed away in 2000. See, accounting equation, double entry system, it's all this. And it goes on, goes on, goes on, goes on, goes on. So, and this marvelous resource. Okay. Right. Anyway, now we coming back to talk about these two type of depreciation. One is straight line method. Other one is reducing balance method. So, straight line method. I'll give an example. Cost 105,000. Scrap value 5,000. Useful economic lifetime 5 years. Can you calculate depreciation?
Okay. Cost.
Depreciation
Salvage
per year
104
using
minus.
straight line method. Sir, Mr. Haitham, sorry, I'm not hearing you. Can you please repeat?
Okay. Minus 5 years. 20,000?
20 is the answer?
Yes.
What
Sorry,
about
sorry,
Mr.
not.
Haitham?
Yes, 20,000. Yes.
What about Mr. Zubair?
Yeah, it's 100,000. If you SV.
But salvage price.
SP is scrap value or salvage value, yes. See, now Mr. Haitham became very doctor in abbreviations.
See here, because I was taking my dinner as well. So sorry.
Oh, you're increasing your menu for Mr.
Yes.
Muhammad.
See, now in Sri Lanka, we have a common belief. There is something called, I don't know how to say in English. Um, okay, I believe you all know this. EVI? Do you know what is evil eye means?
I mean, of course, I mean, evil eye, I know what is evil eye, but what is behind it?
See, the moral of this story could be Mr. Zubair is eating alone.
Evil eye. Okay, I get it. We have it here as well, which is we call it
that Ruqya.
Ruqya, yes, evil eye, which is we call it hasad. Hasad, you know
Now,
what I mean?
Mr. Zubair is eating, keeping us in starving. So we will have an evil eye on his food. I'm just joking, huh? Don't worry. You can fear-free. Fear-free, you can eat.
No.
But by the way, this is the right way, when we say evil eye, because the Prophet Muhammad said that, if we, if someone has that, issue with his, it's like,
But if you really recite A'udhu Billahi Minash Shaitanir Rajim, things won't come close to you.
Exactly.
Anyway, so calculation is cost minus scrap value divided by useful economic lifetime. 105,000 minus 5,000 divided by 5. 100,000
divided by 5.
So per year depreciation is 20,000.
20, yeah.
Clear?
Yeah.
Fine. So if I draw a diagram or graph, this is the cost. This is the cost. Give me 1 minute. I'm getting a call from Saudi.
Okay.
No issue.
I hanged up the call and then I will talk to after the class. So, see, this is the cost. This is time. And then 1, 2, 3, 4, and 5 years, time in years. What would happen if you follow the straight line depreciation? You will have a line like this, a straight line curve, downward sloping.
Clear.
Straight line, downward sloping. Clear?
Correct.
Yeah.
Okay. With this, I may have to stop the lecture today, and I will see you all tomorrow at 6:30, inshallah.
Inshallah. Okay.
Okay, inshallah.
Okay, then. Thank you so much.
Thank you.
Thank you.